see you back soon. A good conversation. Prakash Diwan is with us as well. Prakash, good morning. Good to have you with us here. We start a new week. Comment on steel. If you've been listening into the conversation with Nigel there, what are your thoughts? And how is the market texture looking, Prakash? I mean, are we starting to see a little bit of froth being taken off? The index might not show it, but we are seeing profit booking in broader markets.
Good morning, Prashant. So, on the steel names, I do agree. There's going to be definitely a lot of positivity in terms of the inventory management. None of these companies will now be saddled with a lot of stock, which probably was getting a bit uncompetitive in terms of price points and all. But it's something which, in terms of them getting to have improved realizations, they will have to look at least 2 quarters ahead in terms of making some meaningful sense out of that, because this is not something which you can just quickly ramp up production and start selling off, and the export prices anyways are not favorable at this point in time for you to make great money. The domestic demand is what's keeping a lot of these companies very positively buoyant, and if there is some sort of an indication from global reopening in terms of China particularly, making some sort of moves on normalizing it, beyond the COVID lockdown protocol, then probably things could probably look up. But if you actually go through, fine comb the entire steel sector, there's very small companies that could probably benefit. Maybe you could have a Godavari Power or maybe a Kirloskar Ferris because of the fact that now castings don't have any this thing. Pig iron duties have also got rationalized in that sense. So there's going to be definitely some sort of a percolation of the benefit, but it's not going to be very dramatic, is my view. In fact, there are some companies like there's a very decent company, not discussed much, but called Lloyd's Metals. Now they have enough mining assets and enough supply this thing arrangement which are already there. The demand is never been an issue with them. And they could probably, look at some sort of a rationalization on realization. So there will be these small tweaks, is what my guess is, Prashant. So that's it. On the market texture, I think it's evident we are, beyond earnings season. And what we are looking at is that the earnings season has been a mixed bag. There are certain sectors where there has been some disappointment, some concerns emerging. And those are the sectors where there's a little bit of rotation getting out from, So when you look at advanced decline, the reason why it doesn't give you the same buoyancy as the Nifty did, let's say, a week back, was because there are lots of churn that's happening from an inter-sector perspective. And my guess is that, whenever you are close to tops, there is a little bit of a hesitation to buy more, buy afresh. But, I think the way IT is kind of rebounding of sorts, or, even financials are kind of giving you that comfort of assurance, cements making a comeback, you will start seeing some buying emerge. But probably, it's not happening immediately. People are still digesting the results, this thing. So that's the point. But, and these gap downs are the only time you could buy as a trader into the markets and make some money, given the texture of the market being so volatile. I mean, you get moves on both sides, but entry gets a bit difficult. But today's day, for example, is ideal for somebody to buy in and probably wait for the rest of the day to reward you. So it will be a very, very, what you call, short-term orientation for most people. Even positional calls, the timelines have shrunk. But fundamentally, I think the results season thrown enough opportunities for everybody to look at from a medium to longer term perspective, to buy into some new themes, new sectors that are emerging very strong.
I wanted your thoughts, Prakash, very quickly on escorts, because there's a very strong guidance that the company has given. A full roadmap has been laid out for the next couple of years. But the stock has also rallied a lot. At this price, is it still favorable for investors to go long?
Good morning, Sonia. So I think, that's the roadmap that you see is exactly what a Japanese player would think like. That's exactly why Kubota is in. They've taken time to settle and get their feet into the business and the market. And now they're very clearly looking at these segments where they would get into a little bit of a leadership mode in the next year, 2 years, 3 years. I think it's a great business model that's emerging. It's a great product profile, at least, that's emerging. But you will have to buy it on dips, and the market will give you dips in the auto side on any particular day where there's some sort of a news flow that probably is not so strong. And that's exactly when you buy. I mean, it has run up, so has M&M. but all these stocks will give you some opportunity to get in, and that's where you latch on to for the next couple of years. Given the roadmap gives you visibility of very good earnings, this thing traction, which justify price levels, but maybe probably 8, 10, 20% lower from where we are.
Okay, well, just stay on. We have a quick corporate conversation that we have to complete. So Prakash would